How y'all doing? What is the day? I'd like to welcome y'all to the overnight price action for January 24th, 2023. Man, 2023, this year is already, this month is already over. Time keep on slipping. Hey, I like to thank everybody. Y'all, I'm trying to get myself together. Y'all know I just got back in the house. I like to thank everybody for hanging out with me last night. I know I got to run my mouth a whole lot on the price action recap last night. We made it a teachable moment. We turned it into a teachable moment, trying to, you know, share a little wisdom, if you will. Let's get the pleasantries out of the way, man. Then we're going to get into it, man. If this is your first time tuning in to Tim's Tidbit, man, I'd like to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still want to say welcome. And I'd like to give you a nice hearty well, thank you for always tuning in to Tim's Tidbit and hanging out with me and my homeboy Spidey back here. Y'all see Spidey over there? He's chilling by the window. Yep, I'm sitting back a little bit further because I don't want to hear nobody talking trash about my forehead. Good morning, everybody. Good morning. What's up, here to learn and share? Are the birds chirping? No, they not. Good morning to you. The birds are frozen. It's cold in Columbus, Georgia, man. It's cold. They out there. They stuck to the branches right now, man. They sit up there like, it's cold in Columbus, Georgia, man. Hey, again, thanks to everybody who hung out with me for the price action recap. If you don't know who I am, like I said, if this is your first time tuning in, my name is Timothy Lee Rogers. See, I get on Al Gore's internet every single day, and I talk about the price action dealing with the S&P 500. Why do I decide to do that? Because that's what I trade. I trade the S&P 500. That's all I trade. I don't trade nothing else. That's it. And I get on here and I talk about the price action because I want to help someone like you. Yes, you. No, don't ignore the eraser liquor in the back. Ignore him. You want to help you get your aha moment when it comes to investing, trading, all things stock market. It all boils down to understand how to read the price action, right? The fundamentals are important when you're looking at the different companies that you may want to invest in long term. But if you are a trader, if you are an active portfolio manager, meaning you actively you invest in this company for a time period, then you take your money, you take your profits, and then you put it into this company for a time, it is imperative that you learn how to read the price action, because the price action is manipulated, if you will, by the algo. The algo does certain things at certain times. And when you learn to get in sync with the algo, right? Get in sync with the algo. This the algo. Get in sync with the algo. Then you can make intelligent decisions on when I want to get in and when I want to get out. Help you with your price targets, if you will. And I just want to help clarify that for you. If that sounds like something that you're into, please consider subscribing if you're not subscribed. The experts at YouTube told me I'm not hitting my 2,500 because I'm not asking you to subscribe. Please subscribe. And if you already subscribed, share it with your friends and family. Say, hey, I really enjoy Tim's content. He's a nut, but I enjoy his content. His content is great. Come on over and subscribe too. Let's get into it, man. Yes, the poor birds. The birds are frozen. The poor me. I'm frozen. I got to take my teenagers to school. How about that? We got some news today, I think. Let's see. I think we got some news today, if I'm not mistaken. I think is it service information, service data, service PMI? Yes, service PMI today at 9:45. And then Richmond manufacturing index at 10. This is it's an orange folder on here, so it's potentially volatile. This is level of composite index based on service manufacturing in Richmond. They surveyed the Richmond area. Above zero indicates improving conditions. Below indicates worse condition. Tends to have a muted impact because there are earlier regional indicators related to manufacturing conditions. Surveyed by 55 manufacturers in the Richmond area. All right. This is also called the Richmond Fed Index, Manufacturing Activity Index, and Composite Manufacturing. Okay. So above zero, improving conditions. Below zero, not. And they're looking, the forecast is for it to be -5. They're looking for it to be a contraction. Right? They looking for it to be worsened. Like, you know. So let's see how that plays out. And then the PMI, they're looking at PMI to come in at 45.3. The last time it was 44.7. So they're looking for a contraction. I mean, no, this is the expansion. 44.7, 45.3. Oh, okay. They're looking for like a expansion right there. That's the consensus. Right? Let's see how it plays out. Let's get into the price action. Since we on Algo's internet, let's go over here and holler at our homegirl, and then we gonna take it from there. Y'all know who she is. Her name's Spalene. If you don't, man, hold on for a second. If y'all ever, do not ever, y'all see this bald head dude right here in it. Let me hold on. Let me get y'all see this bald head dude right here. This guy, y'all see that guy right there. If he ever tweets anything, do not respond, because this man will go on a 55 tweet binge just to explain his side of the story. I had to turn my Twitter notifications off because this man, oh my God, don't never I would never comment on one of his tweets again. You know them habitual tweeters, like, you know when somebody sends you like you get a text from somebody, okay, then you be like, you respond, yeah, I'm good. Then they text you back, okay, yeah, all right then they text you back, stop texting okay then, I answer, stop saying okay then. That's him. He's gonna keep going. I did not disturb your 4 a.m. workout. Hey man, let's get to it. Shout out to homie Mark, man. If you do not follow, it used to be trading with a dummy. Now it's uncultured currency, and he got his favorite person, Elon Musk, voice on. If I'm not mistaken, I think it's because it sounds like Elon Musk on his little intro outro thing, right? He'd be like, I think I just been cultured or something like that. It sounds like Elon Musk. But if y'all don't follow this dude, he got a podcast with the homie Mo. They do a great job. It's called Money Market Truths on YouTube. Uncultured Currency. He do phenomenal stuff with his kids. He almost got banned one time because him and his daughter did this. It was a nice little trail, not a trail, like a skit for WWE, and he almost got banned off YouTube. It was funny to me. Like me being a videographer, I knew what he did. I know his daughter was safe. You know what I'm saying? It was funny. But he be doing good content with his kids, man. Y'all check my boy out. Y'all check my boy Mark out. Uncultured Currency, Money Market Truths. I don't know what Mo stuff is, but him and Mo got Money Market Truths on YouTube. Y'all check them out. They do it's like the full gamut. It's like they got technical stuff, fundamental stuff. It's like the full gamut. Y'all check them out. It's good information. If you can put up with Mark, it's good. But other than that, nah, that's my dude. That one partner, man. Y'all check him out. Anyway, Let's go over and holler at Spyleen. We wrote a song for her. Want to hear? Here we go. Spyleen, Spyleen, where you at, baby? Here I go. Hey, how you doing? Look what you about to do. Spyleen about to gap down slightly. We got a little over $2. We're about to gap down a little over $2 on Spyleen, right? A little over $2. Let's see how the week play out with the news, right? We got a nice daily fair value, got a bullish fair value gap down here, right? It'll be nice. We've taken the buy side out on the SPY. It'll be nice to come back down to this daily imbalance, get down below the weekly equilibrium and hit this daily fair value gap, and then push back up and see if we can get this buy side liquidity resting above these relative equal highs here. We got that one, and that one. See if we can get that buy side liquidity up there that we've been waiting on for so long. Our eyeball is extremely red now. We've had this eyeball sitting here since what? October? We had this eyeball sitting here since like October, I think. This eyeball is bloodshot red now. Needs some Visine. Trying to get to this buy side liquidity, right? Oh, you know, I just thought about, forget about the overnight price action. Let's look and see what we did. We consolidated up until midnight, and then at midnight we popped up into this bearish fair value gap, and then we sold down, and now we've taken out the sell side liquidity below that 1500. That'll be the 1400 candle on TradingView. If you follow along on TradingView, that 1500 candle, 1400 candle on TradingView, we've taken out the sell side liquidity below there, and we've come down and just about filled in this bullish fair value gap right there. We have another fair value gap just above the breaking market structure. There's a daily fair value gap right here. You all may not be able to see it. I got it dimped down because I had a lot going on my screen. So we got the wax on of this daily fair value gap, right? Can we be coming down to get the wax off, or will we come down and bounce off of it because of this fair value gap right here, right after this hourly breaking market structure? Let the algo show you what they want to do. We got news coming out. Don't jump into nothing hastily. The midnight open was at 40.37 even. The London open was at 40.34 even, right? And we never really made a London low. We just bled down. It was just bled down, right? We had the midnight open, poked above midnight, and then just started to bleed down, right? Yesterday, we got a power 3 to the upside. What will today be? Will today be a power 3 to the downside, or will it be another power 3 to the upside, right? We poked above midnight here and then started to bleed down. We consolidated, popped up above midnight, and then bled down, right? Will this be a huge Judy swing where we bleed down and then take off after coming down to, and notice right where we are before we get into what I want to talk about. We are in between a bearish breaker and a bullish breaker, right? This is the bullish breaker right here, this up close candle right there. What makes that a bullish breaker, Tim? This high right here on this price leg there. That price leg there came down and took out the sell side. It took out a bunch of sell side all the way down there. Took out the lows, right? Then we traded back up through it. So now that is a bullish breaker, right? Over here on the opposite end down there, way over here, this low right here, this price leg there, took out this high. Then we traded through it. That's a bearish breaker right there. That down close candle at 8 o'clock, that'll be 7 o'clock on the 14th of December. For TradingView, 7 o'clock. Ninja traded at 8 o'clock, down close candle on the 14th. That's a bearish breaker. and we're in between a bearish breaker and a bullish breaker, right? Right now, we've come below equilibrium of yesterday, right? We've come down to just below equilibrium from yesterday, filled in this hourly fair value gap, and then the body of this candle is respecting this bullish breaker for right now. So we're still in between. We went up to yesterday, we went up to pretty much mean threshold, a little bit above mean threshold of this bearish breaker, hit the weekly order block, right? And now we're still inside a daily order block. There's a daily order block there that you all may not be able to see, but if I highlight it, let me make it a little darker so you can see it. That orange outline with this white background, all of that is a daily bearish order block that we're inside. We're inside a daily bearish order block right now, and we're just chopping around, right? And inside that daily order block, we got a bearish breaker that's at the top of the daily order block, at the bottom of the weekly order block. And we got a bullish breaker that's, that we're in between, prices in between right now, right? And right now we're still, the bodies of the candles are still respecting that bullish breaker, right? We closed the 9 o'clock candle. That'll be the 8 o'clock candle on TradingView inside the bullish breaker. And now we've set relative equal lows, and we're right down here, just a stone's throw away from, did we hit it? 40-12-50, 40-12-75. So we was 2 ticks away from the closing the fair value gap over that 60-minute fair value gap. But we're chopping around right around yesterday's equilibrium right now, right? Took out the buy side, came back down. We're sitting right around equilibrium right now. Let's see what the market wants to do once the news come out. See if we want to come back down to this break-in market structure. Got a fair value gap right there at the break-in market structure. We got an order block down here at yesterday's low, a bullish order block right down here at yesterday's low that I don't have marked out, and that is sitting right at the weekly equilibrium. So this bullish order block is sitting right at weekly equilibrium, right at yesterday's low. Do we want to come get the yesterday sell side? Do we want to come back down and get the fair value gap? Let the algos tell you what they want to do when they start out, because right now we've just been bleeding down. We've just been repricing down. There's been no attempt to really rally. It's just been repricing down since the midnight open, right? Nothing to see here, folks. What I want to share with everybody was I was noticing, if y'all look over here, this is when I put these blue lines over here, for those that don't know, this was the yearly open line for the YM, which is the Dow, the NQ, which is the NASDAQ, and the ES, which is the S&P 500. These are the futures, right? I noticed that the Dow was lagging, right? If y'all remember back in October when we got our quarterly shift, right? And for anybody who don't know what the quarterly shift is, this is something I learned from everything I be talking about on here be something I learned from ICT. It's just the way that I understand it. I'm not saying this is right. I'm not trying to teach his stuff. If you want to learn his stuff, go to his YouTube page. He got it all out there for the free 99, right? But this is the way I understand it, right? Or anyone, what you say? Or anyone chat, where exactly is the breaker at the high of yesterday's? Say that again. What? Where exactly is the breaker that the high of yesterday is in? December 14th, I said. It'll be the I think it was the 7 o'clock candle for TradingView. Talk about this breaker up here. It was December, I think it said December 14th. December 14th. December 14th. If you're on TradingView, it'll be the 7 o'clock candle. This down close candle right here. It'll be the 7 o'clock candle on TradingView and the 8 o'clock candle on NinjaTrader. Right there on December the 14th. That's the breaker. That's the bearish breaker that we hit yesterday. Right. Also, peep this right here. I just saw this. I didn't pay this attention yesterday, but it's a lot of confluence in that area too, right? Consequent encroachment on this super long wick right here, 40-50, right? 40-50, 0.50, right? So that's consequent encroachment on a super long wick, right? And then that's right in line with the mean threshold of this breaker, right? 40, 55, 25. If you look at the entire breaker, and if you just look at the body of the breaker, it's 40, 53. You know what I'm saying? So you got the mean threshold of this bearish breaker. You got consequent encroachment of this super long wick right here. You know what I'm saying? So that's a lot of confluence for price to hit and reject off of. You got the top of this daily order block, bearish order block that's right there. And you got the opening. You got the bottom of this weekly bearish order block in the exact same place. So everything is lining up. The weekly, the opening up, the bottom of the weekly order block, the top of the daily order block, mean threshold of this 60-minute breaker, bearish breaker, consequent encroachment of this wick right here. There's a lot of stuff for price to smack up against right there and back off of. And that's what price did, right? Went up there, smack, because there's this like that orange or yellowish color looking line. That's the top of the daily. This line that right there, you can't really see it where I got the horizontal line hovering right now. That's the bottom of the weekly. That's, you see the mean threshold of the breaker, and then consequent encroachment of that wick is in there too. Price hit that area and backed off. See that there? We hit it, reacted, and then dropped it like it's hot, came down to this equilibrium, right? Fair value gap and breaker, whole lot going on right there. Stopped in its tracks and then consolidated for the rest of the night, right? And then we started to melt back down, and now we're back down to equilibrium again, back down to the bottom of the breaker, and back down to trying to fill this fair value gap. Let's look at that on the ES and see if it actually filled on the ES, because sometimes it'll be a tick or two off between the ES and the MES. It'll be a tick or two off between the two. So high 40-12-50, same thing, and the low 40-13. So no, it didn't close there either. See, because this is 40-13, but the MES was 40-12-75. That's why it'd be like a tick or two off. So it didn't close over there either. But yeah, that's it. Now back to what I was saying. The market getting ready to open in 5 minutes. Go ahead and wrap this up real quick. I learned about the quarterly shift from ICT. Every 3 to 4 months, we get a quarterly shift, right? In the, in like the springtime, we usually see the quarterly shift to go bearish, right? Meaning one of the three indices start to make lower highs, and the other two are still making higher highs, and that's SMT divergence. So one of the three indices, you start see the money coming out of one of the three indices. The other two is still making higher highs, and the other one is making lower highs. You start to see that SMT divergence, that tip your hand that, hey, we finna go into that quarterly shift, right? And then in the fall time, you usually get that SMT divergence where one of them don't make lower lows, right? One of them don't make lower lows, and you be like, okay, they go to SMT divergence. One of them not making lower lows, so the big boys are tipping their hand like, oh, they're starting to buy this one, and so it's not making lower lows while the other one making lower lows, and then whichever one's showing the most strength, that be the leader most of the time, and whichever showing the most weakness, that be the laggard most of the time, right? I said all that to say, back in October, I noticed that, well, I just noticed the other day that the Dow was lagging, right? The Dow is lagging. It's right around the yearly open. The NQ doing its thing. The ES, it's the red-headed stepchild in the middle. I mean, the ES doing its thing, but I think the NQ been leading on the year, but it's still a little bit behind the SPY as far as getting close to the highs, I think, of August. But the NQ been doing its thing. In the SPY, this red-headed stepchild in the middle, and the YM been lagging, right? I'm trying to talk fast because the market fund open, right? Stay with me. Back in October, right, we got our SMT divergence, right, to the upside. Let me hide this. Why are you not in there? Get in there. Right, let me hide this. And then let me go over here. I want to look at the NQ, new pain, and I want the YM, new pain, right? So let me change. I forgot to get on the ES. I can show this stuff. Let me see. I need to get on the ES. I got 3 minutes before the market open. So, right, if you look, let me get me a line. If you look right, in October, right, when we came down, like we made the August high, right, and then we started coming down, and we took out the June lows, right? Once we took out the June lows in October, if you notice, the ES, right, the ES was making made lower lows, right? The YM, right, came down, took out the June lows, right? The YM made lower lows, right? I mean, the NQ, I'm sorry, the NQ made lower lows. But the Dow, we came down, took out the June lows. The Dow made a slightly higher low, right? That was the SMT divergence right there. That was tipping your hand that the big boys was getting ready to rotate and start going long, right? And then the Dow ripped, right? And came all the way up, and we took out these August highs, right? The Dow ripped, took out these August highs, right? Right? Took the August highs out. The NQ and the ES, they were going up, but they came nowhere near. The NQ came nowhere near the August highs, right? The ES came nowhere near the August highs, right? Got closer than the NQ did, but came nowhere near it, right? But now, look who's lagging, right? The Dow is lagging, right? The Dow is lagging. Now, are we getting ready? Are we getting ready to start? This is something I'm keeping my eyes on. This is something I'm keeping my eyes on. Are we getting ready? The market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take copious notes so you can go back and study what you learned today. I'll see y'all tonight at 6:30. Thank you. If you're not subscribed, please subscribe. And please hit the like button. Thank you. So are we getting ready? Right? Let's come here from the high in January. Right? Yes. Right there. This January. Yeah. Okay, yeah. The high in January here. Are we getting ready, right, to start making lower highs on the Dow? Are we getting ready to start? Are we getting ready to start showing our SMT divergence? Right? I can't even say, are we ready? Because we already showing some SMT divergence, right? We already showing some SMT divergence. So The question that I posed to myself when I appreciate that. The question I posed to myself when I noticed this last night, I said, okay, what buy side are we going to attack on the stronger indices before the SMT divergence kicks in, right? On the way up, the Dow took out the August highs, right? The Dow took out the August highs on the way up. When we got the SMT divergence and then the Dow ripped, the Dow went up and took out the August highs. Now, as you can see, money has been rotating out of the Dow into the NQ and the ES because the Dow is showing weakness now and the NQ and ES have been showing strength, right? So this is the question that I posed for myself, and this is what I'm watching, right? Will the NQ and the ES make it back to August highs before the SMT divergence takes a hold and take us into our weakness period? You know what I'm saying? Before it takes us to our weakness period? Or, you know what I'm saying, like when we be getting real weak around February, March, April, even May, you know what I'm saying, get to the selling May and go away, then get that summer pop. Then we see some SMT divergence coming around April or May, and then we get that summer pop. You know what I'm saying? How far up will the ES, will they match the Dow on taking out those August highs before we get the springtime weakness, the February, March, April weakness? Will we take out this August high before? Because as you see, and that was what? That was 3 months ago. November, December, January. Every 3 to 4 months, we get a shift. We get a quarterly shift. This is stuff that I learned from ICT. Every 3 to 4 months, we get a quarterly shift. And we are starting to see that SMT divergence right there. So just keep that on your radar. Keep your head on the swivel. And that's what I'm looking to see, if we're going to get back to that August high, because the high that we've been waiting for has been the September high right here. This is the high where our eyeball is bloodshot red. This high right here, right? Will we get to that September high and dump? Will we get to that August high and dump? Because the Dow took out the August high. Will the NQ and the ES match the Dow by running out the August high? Or will they peter out beforehand and give way to the SMT divergence? That is the question. And with that, I yield my time. I appreciate y'all. I'm like 4 minutes over. I jollipies for going over my time again. Hopefully somebody got something out of this. That was just something that I saw last night, and I want to share it with the entire community. Whenever I see stuff, whenever something pops up on my on my radar, I try to share it with the community, and just try to give everybody something to think about. You know, not saying that I'm right, not saying that I'm wrong, but it's just through the stuff that I've learned from following ICT, the algorithmic trading theories that he have. The stuff don't miss, man. The stuff do not miss, right? It don't miss. So that's what I'm watching for my longer term swing. Because I told y'all, I'm like, with my options, I'm shifting to, like, I'm limiting the amount. I'm probably gonna maybe take like 4, maybe 5, but probably 4 or less trades on the option side. That's what I'm doing from here on out. I'm doing like quarterly type trades with my options. So that's what I'm watching right now. Teachable moment. I appreciate that. I appreciate that, Audra. I appreciate that. Here to learn and share. To all the black spiders, I'm about to jump on the live market watch right now. As soon as I end this, I'm gonna pop it on. We got news today. This week is going to be crazy. I'm real cautious about trading anything this week. We got a lot of news this week, so I'm very cautious about it. I looked on my Twitter earlier when I was dropping the boys off, and ICT said he was going to be talking about something or teaching something. So if he's like tweeting, I'm gonna probably have his tweets up. If he's talking, I'll probably have, you know what I'm saying, his thing popped up or whatever. But I'm real cautious about this week. And I ain't really rushing to get to the live market watch because we got news at 9:45. So, but I'm really cautious this week because we got a lot of news coming out. I'm to the place in my trading where I will not take a trade for an entire week if I don't have a warm and fuzzy. I'm serious. Y'all don't, man. And what the part, let me say this before I go. The part of the reason why I shared this right here about what I saw, what I noticed with the SMT divergence here, and it's been 3 months since we had the last SMT divergence, right? The reason why I shared this is because I don't want anyone to get stuck trying to guess when the market is going to change or reverse. Or it's like people I know, people I see online. So I see so many people always talking about bull traps and bear traps. And man, stop trying to guess this stuff, man. Let the market show you what it wants to do. Stop trying to be, let me go full screen for this, right? This Uncle Tim talking now. Little Timmy Rogers, all the jokes and all that stuff is gone to the side. Uncle Tim talking right now. I'm going to get close to the camera. Stop trying to be that guy or gal that gets top wick or bottom wick. Stop trying to be that person. I have lost so much money trying to predict when the market was going to turn around because I wanted to be that guy that got top wick, and then I can get on my Instagram and stick my chest out like, yeah, I do this. This is what I do. You know what I'm saying? Stop trying to be that guy or that gal, man. The market will always give you an entry. The algorithm, I'm an algo conspiracist. I know a lot of big banks and everybody use algorithms to trade for them. Those ain't the algorithms I'm talking about. I'm talking about the algorithm that controls the market, right? There is no way that this market can repeat this stuff over and over and over and over because of what all these different institutions are doing. This institution ain't buying the same as this institution. That institution ain't selling the same as that institution. I'm not buying the same as you. You're not buying the same as them. So if everybody's doing something different, this market wouldn't do the same thing over and over. There's one algorithm that's controlling the market. We're just the peons that got to accept that and just get in sync with algorithm. Now follow me on this. Right? The market always gives you an entry. It will tip its hand. And when you learn to see the tails, for people who play poker, I don't play poker. When you learn the tails of the market, if you see a sweat bead on the algo forehead, if the algo go to twitching in its seat, it has tails. And when you learn the tails, right, you figure out, okay, the algo trying to get there, or the algo trying to get there. Remember, if it's trying to get there, it's going to go somewhere down there to get the liquidity to get there. If it's trying to go there, it's going to go somewhere up there to get the liquidity to go there. So when you start seeing the SMT divergence, when your fundamentals start telling you we're oversold, if the PE of a company is too high, all your fun, anything you use, when it start getting to that time, you like, hey, that's when you get in tune with the algo and be like, okay, the PE too high. The fundamentals are saying we gonna pull back a little bit. Look at the market and say, okay, I see S&T divergence. It looked like we finna go down. Okay, it looked like we finna go down. Since we getting ready to go down, where are we gonna go up to get the liquidity to go down? Don't just randomly jump in because you say, okay, it's time to go down. I'm gonna get in, right? And it's not about being perfect. It's about being smart. Preservation of capital, right? Same thing. If it's time to go up, don't just jump in and say, okay, I'm gonna buy the time. I done got my head bust so many times buying the time, right? And newsflash, right? I used to work with some of my friends, some of my Caucasian brothers and sisters, right? We was all silly, right? And they used to always tell me, toss some Tim, if you ever hear a country girl say newsflash, buddy, you in trouble. Newsflash, if you get into a position, right, and go through 3 weeks of drawdown, right, and you just hang on, and then it finally turn around, and then you get 50, 60%, that's not a win. Newsflash, buddy, that's not a win because you held that way past your risk tolerance. If you took 3 weeks of drawdown, you held that way past your risk tolerance. Be honest with yourself. 3 weeks of drawdown, ain't nobody taking that much drawdown. 3 weeks of drawdown? Newsflash, buddy, that ain't a win. You just refuse to stick to your risk management just so you wouldn't have to get on Al Gore's internet and tell people that you got stopped out so that you won't have to say, oh man, I was wrong. You gonna go pump your chest and say, I got a 50% win. I'm doing better than Goldman Sachs. I'm hitting 50%. But you ain't telling people that you went down 80%. Now just imagine if you would have just got stopped out at 10%, got back in because your thesis was right. You just got in early because you didn't use the price action to give you your entry. You just randomly jumped in and said, I'm going to hang on. Right? But if you randomly jumped in, if you just got stopped out at 10% or whatever, right? Then use the price action to tell you when to get back in, and then you hit that 50%, right? Guess what? You could have hit way more than 50% because you wouldn't have had to come back out of 80% of drawdown and go to 50%. Guess what it would have been then? You would have double, triple your investment because you didn't have to fight through all of that drawdown. All of that tying up all your capital because you don't want to admit that you're wrong. Man, I'm fun to get off my soapbox, man. Hey, Black Spiders, I Jolly Pies. Y'all know how I get. I get the renting. Hey, man, I'll see y'all tonight at 6:30 for the price action recap. Black Spiders, I'm about to get on the live right now. I'll see y'all tonight at 6:30, man. Gone.